There's a swiftly emerging risk to this year's economic recovery that financial markets are only just now becoming aware of. That's why stocks have been so volatile recently. But they certainly haven't yet even begun to fully price this risk in. And if they're forced to do so, man, that could easily be the trigger for the major market correction that many experts claim is overdue. So what's this big new risk? I'm glad you asked. Let's dig into the data. Welcome to Wealthion. I'm Wealthion founder Adam Taggart, here to talk briefly about what's behind the recent volatility in the financial markets over the past few days. Now, of course, markets are complex systems and a multitude of factors exert influence at any given time. And for certain, concerns of hotter than expected inflation have been increasingly weighing on investors' minds of late. With last week's CPI print of 5.4%, the highest since 2008 and nearly 3 times the average over the past decade, investors are right to question the Federal Reserve's assurances that the current price increases we're experiencing will indeed only be transitory. But there is another big potential risk that the market is only just now beginning to consider. And that's another wave of hospitalizations caused by the new Delta variant of the COVID-19 virus that may require a return to business slowdowns or even shutdowns. Now, folks, let me make it clear that I am not a scientist or a health expert. I'm not saying there will be another major COVID resurgence in the US or in any other country where case rates have recently bottomed. But I am suggesting that the probability is non-zero and rising as we look at the latest data. Reports on the COVID Delta variant indicate that it is fast exploding across the US, now making up 83% of all COVID cases. That's a 33% increase from just 2 weeks ago. Also, over those same past 2 weeks, total COVID cases in the US have tripled, and hospitalizations have gone up 45% and deaths up by 75%. Doctors are now calling this Delta variant outbreak the, quote, 4th wave of COVID, which they describe as, quote, alarming as best. Dr. Gregory Poland of the Mayo Clinic, one of the nation's leading experts on vaccines, says, quote, this is a serious warning. This is a very different variant. It will find you. He also said this virus will find everybody who is not immune. He's particularly worried that younger people appear to experience substantially worse reactions to the Delta virus, saying, quote, we are seeing a rise in severe disease and hospitalizations among young people. And mind you, this is happening in summer, when conditions are supposed to be the least favorable to viral spread. Now, fortunately, it seems that those who have received full vaccinations are largely, but not always, protected against the symptoms of the Delta variant. But as of right now, there are still 48% of Americans who are not fully vaccinated and therefore susceptible to this more contagious Delta strain. This is important because 99.5% of COVID-related deaths in the US now are unvaccinated patients. So the big question here is, will this 4th strain create a surge that once again overwhelms our hospital beds and medical professionals with too many patients to treat effectively? That is the big risk to the medical system, because even if the Delta strain turns out not to be as fatal, when the hospital system becomes overwhelmed, people with all other types of serious medical conditions start dying from lack of sufficient care. If that indeed were to happen, lockdowns, business restriction mandates, supply chain disruptions will return, crushing the budding hopes of a global economy anxious to get back to life as we once enjoyed it. All the tasty GDP growth we've enjoyed over the past few quarters would painfully lurch into reverse. Now, I'm not predicting this will happen, but I am suggesting that it's a non-dismissible risk at this point, and virtually none of this risk is currently priced into today's markets. Over the past week, we've seen the first few headlines and data about the Delta strain acceleration in the US. That's a big reason for the recent cooling off we've seen in the days since the major indices hit their latest all-time highs a week ago. It's that first faint whiff of fear. This is important to note because if the risk from Delta suddenly starts looking a lot more serious, it could well be the trigger for a major market correction. And speaking of market correction risk, let me just zoom out for a moment to revisit the big picture macro-wise. because we don't need a COVID case resurgence or more inflation for the markets to correct now. There's already plenty of instability in the system, which is why venerated experts like Jeremy Grantham and Michael Burry are on record predicting a major 50% plus drop could happen at any time given current conditions. To drive that home, let me just quickly dial through some of the bigger flashing warning lights currently blinking red on my macro dashboard. But very quickly before I do have one important ask of you. If you haven't done so already yet, please subscribe to this channel by clicking on the subscribe button below, as well as that little bell icon right next to it. While it may seem like a tiny action on your part, it makes a big difference for us if the thousands of folks like you watching this video all do it together. Because the faster our subscriber count grows, the bigger the experts we can attract to come on this program in the future. Okay, now let's get to the macro risks that keep me up at night. Number one, overvalued markets. Let's begin with the famous Buffett indicator, one of the most universally accepted measures of market relative valuation. It now stands at over 234%, the most overvalued reading ever in its history. A full 2 standard deviations above its fairly valued long-term average. Financial markets will have to drop at least 50% from here just to begin to re-enter fair value territory. As additional context to just how historically unprecedented today's levels of overvaluation are, this next chart compares the price action of the stocks driving today's markets versus previous asset bubbles in history. You can easily see we are now in uncharted territory, and when this bubble bursts, as all bubbles in histories do, the fall will be farther than ever experienced. Number two, excessive speculation. Capital has been rushing into speculative assets this year like never before. Meme stocks, cryptos, and SPACs, but the unchecked rise of margin debt is truly concerning. This is money borrowed to purchase financial assets, and it's never been higher nor been rising as fast. When investors are this leveraged, if the market starts falling, they'll be forced to sell their holdings to meet margin calls, creating a cascade of falling prices that will very likely get very ugly in a hurry. Number three, market concentration. Never before have so few companies comprised such a large percentage of total equity market capitalization. This chart shows how the biggest 5 tech stocks make up 21% of the value of the S&P 500. They are the most widely owned stocks across the ETF and mutual fund universe. Extreme market concentration like this is a classic hallmark of late-stage bull markets, and should these 5 stocks start to stumble, they will easily take the entire market down with them. Number 4, inflation and unaffordability. The rampant price inflation in, well, everything is fast tapping out the finances of everybody not in the top 10%. The latest consumer price index data just came in at a blistering 5.4% annual rate, the highest since 2008. In response, we're seeing the early stages of a buyer's strike starting to emerge. For instance, look at the housing market. We see that home buyer sentiment has suddenly plunged to its lowest reading in 40 years. This very well soon may spread to other spending categories, especially when current extraordinary unemployment benefits expire after Labor Day. Number 5, unemployment. And speaking of those unemployment benefits, it's important to note that there are still 14 million American workers still receiving some sort of unemployment support from the government. That's still about 7 times higher than historic levels pre-COVID. When that support expires on Labor Day, that's less than just 2 months from now, a lot of the stimulus driving today's consumer economy will suddenly dry up. These are just several data points within a parade of horribles of additional, equally worrying charts I could keep showing you. But the punchline here is that our current economic and financial systems have more than enough instability and correction risk on their own, without the gut punch that a major COVID resurgence would deliver. As most of you know, I interview the world's top experts on money and markets every week on this program. Not all of them, but certainly the majority of them are increasingly confident that we are headed for the following. First, a near-term period of disinflation in which economic growth starts sputtering out. After that, a sharp and painful plunge into deflation, which could see a market correction of somewhere between 30 to 80%. And then last, that would be followed by a tremendous and highly inflationary policy response by our central planners and politicians. For an excellent discussion on this progression, keep your eye out for the interview I just recorded with Michael Pinto. We're going to release it on Friday on this channel. And folks, if the material in this video has made you worried about the safety of your wealth, perhaps that's a good thing. These are serious risk factors we're talking about. So use that unease in your gut to get your financial life in order now. As always, we recommend working under the guidance of a professional financial advisor who understands and appreciates these risks. You'd be surprised how few do. If you already have a good one, great, stick with them. But if not, consider scheduling a completely free, no strings attached consultation with the financial advisors that Wealthion endorses. These are the same folks who join me on this program every week to share their latest thoughts on the markets. They offer these free consultations as a public service, and it only takes a few seconds to schedule one over at Wealthion.com. Folks, I sincerely hope you're finding value in these shorter explainer videos that I release in addition to my weekly interviews with money experts. Please let me know your feedback in the comments section below. And as always, thanks for watching.